Hey everyone, welcome back to Corporate Decoder, the place where we break down the nitty-gritty of big business and try to make sense of it all. Today we are diving into AMCON Distributing Company's annual report for the fiscal year ending September 2025. Think of it as pulling back the curtain on a major distributor to see if they are still delivering the goods. If you appreciate getting straightforward insights from these corporate documents, please hit that subscribe button and make sure you join our Discord community. Linked in the description below, it's where we chat about these filings in real time. AMCON Distributing Company is essentially a big middleman. They buy lots of products like cigarettes, candy, and health foods from big manufacturers, and then sell them to thousands of smaller stores, mostly convenience stores across the US. They also have a smaller part of their business that runs 15 health food stores. The report covers their performance for the fiscal years 2025 and 2024. So how did they do financially? In plain English, their sales went up in 2025 compared to 2024. This boost came from a few places. They bought a couple of companies, Arrow Rock Supply Birkeland Distributors and Richmond Master Distributors, which added to their income. They also saw higher prices from cigarette makers and a boost in sales of other products like candy and food. However, this was partly offset by fewer cigarette cartons being sold, which makes sense given the ongoing decline in tobacco use over the long run. Their retail health food stores also saw a modest sales increase, thanks to a new store opening and higher sales in existing ones, though some store closures pulled that growth back a bit. Now let's talk about gross profit, which is basically how much money AMCON makes after paying for the products they sell. Their gross profit for the wholesale segment actually went up. This was because of those acquisitions we just mentioned and the higher prices from cigarette makers again, but they also saw a hit on cigarette carton sales impacting that profit too. The retail segment saw a smaller increase in gross profit thanks to those new store sales. Operating income, a key measure of a company's profitability after all their day-to-day business costs, shows a different story. Their consolidated operating income decreased from about $18 million in 2024 to just over $12 million in 2025. This drop is mainly because their operating expenses, those day-to-day costs like salaries, rent, and utilities, went up significantly. These expenses increased due to the acquisitions they made and higher insurance costs. So even though sales went up, the higher operating costs ate into their profits, leaving them with less operating income in 2025. Looking at dividends, they paid out $0.6 million in dividends in both 2025 and 2024. This shows a commitment to returning some money to their shareholders. Now let's talk about risks, and this is where things get interesting. AMCON operates in a heavily regulated industry. One of their biggest worries is the FDA, or Food and Drug Administration. The FDA has a lot of power over tobacco and vaping products. If the FDA decides to ban or restrict certain products like menthol cigarettes or lower nicotine levels, AMCON's business could really suffer. They also face risks from inconsistent regulations across different states, which complicates their business. Another huge risk is their heavy reliance on cigarette sales. In 2025, about 61% of their total revenue came from cigarettes. While cigarettes still bring in a lot of money, this is a declining category. People are smoking less, and that trend will continue. So while it is a reliable source of income right now, it is also a major long-term vulnerability for the company. In their retail health food segment, they are up against big names like Whole Foods and Sprouts. They are also facing increased competition from regular supermarkets and online giants like Amazon. This intense competition means they have to constantly adapt, and that brings new risks like opening those new store prototypes they mentioned. Like most companies today, AMCON relies heavily on its technology systems. They are worried about cyber attacks, data breaches, and disruptions to these systems. A major cyber incident could seriously hurt their business. Let's look at their stock and market value. The market value for their common stock held by non-affiliates was around $17.9 million in March 2025. They also mentioned that as of September 2025, they had fewer than 300 shareholders of record. This is a big deal. If it stays that way, they might not have to report to the SEC anymore, and their stock could be delisted from Nice American, which would make it harder for people to trade it. Now let's glance at their balance sheet. As of September 2025, their total assets were about $391 million. This is up from about $374 million in 2024. This increase likely reflects those acquisitions they made. Their liabilities also went up to about $279 million in 2025 from $193 million in 2024. A big chunk of that increase is in their current liabilities and also their credit facilities. Their accounts payable, the money they owe for goods and services, jumped quite a bit from $54 million in 2024 to almost $70 million in 2025. This could indicate they are buying more inventory or perhaps taking a bit longer to pay their bills. Coupled with the slight increase in their inventory balance, it suggests they might be building stocks. Here is the bottom line, the income available to shareholders. In 2025, net income was around $0.57 million. This is a stark drop from over $4.3 million in 2024. This big decrease is primarily due to the higher operating expenses we talked about, and also a significant reduction in their income tax expense. A lot of that tax benefit in 2024 was likely a one-time thing, so we can expect that level again. The earnings per S-Hair also follows this trend, falling from over $7 in 2024 to just $0.93 in 2025. So what does all this mean? AMCON is navigating a tough business environment. On one hand, their strategy of acquiring other distributors is growing their footprint and sales. They are also trying to diversify beyond cigarettes, which is smart for the long term. However, they are also facing rising costs from inflation and the constant threat of new regulations hitting their core products. The significant drop in net income and earnings per S-Hair in 2025, despite increased sales, is a clear sign that managing those operating expenses is crucial. Their heavy reliance on cigarettes is a ticking time bomb, and they need to accelerate their diversification efforts. The retail segment, while small, seems to be holding its own, but it is not a powerful growth engine. The company is technically still profitable, but the trend in net income is not good. The increasing debt levels and tighter credit facilities also add a layer of risk. In conclusion, AMCON is a company in transition. They are growing through acquisitions but struggling with profitability due to rising costs and a declining core business in cigarettes. They have strategic initiatives to address these challenges, but the regulatory and competitive pressures are immense. Investors should watch closely to see if they can truly diversify and control costs better. Alright, that is our breakdown of AMCON's latest filing. What do you think about their acquisitions and their heavy reliance on cigarettes? What are your thoughts on their future prospects? Let me know in the comments below. If this analysis was helpful, please give this video a thumbs up. It really helps the channel grow, and subscribe so you don't miss out on future deep dives. And once again, don't forget to join our Discord community, linked in the description for live discussions. Thanks for watching, and we'll see you in the next one.